100% financing on 8 units. And I want to tell you how it was done. I'm Tim Diesel, I'm a commercial real estate consultant. Today I want to tell you an awesome story that I got one of the students I was working with, and they put this deal together and I thought it was amazing. So if there is a multifamily deal that you want to get into and you want to start small, maybe you're not ready to take the plunge into 20 and 30 and 40 units. Suppose you found a 4-unit or a triplex or whatever, something tiny. There are programs right now, and you got to do your research on this because I'm not a residential guy at all. But if it's 4 units or less and you're a veteran, there's 100% financing. And I didn't know this. I always knew the VA programs were a little bit aggressive. And if you're looking at a 4-unit property and maybe it's next to another 4-unit property, it doesn't have to be directly next to it. It can be close by, it can be something like that. Properties are sold in portfolios all the time. So these two gentlemen, they picked up a 4-unit each. That's together, that's an 8-unit. And they want to bring on one of their friends who's also a veteran. They're going to pick up another one. And they want to put these things together and sell them collectively as a group. Well, that's a fantastic idea. Remember, you're trying to control assets with very little money, right? You want to get in light. Sure, if you have millions of dollars, then you don't need any of this stuff. You can just, buy triple net leases and make your 5-6%, whatever it is you're comfortable with. But if you want to get a little creative, there's ways to do that. So suppose you see a 4-unit that you're interested in. Now you have to live in one of the units, which is not the end of the world. That's not bad. You don't have to stay there for the rest of your life. But if you do find something like this and you can get in without a penny out of your pocket, that's fantastic. That's great. I know there's 3% down programs. I'm sure there's all kinds of stuff like that. But eventually, let's say we're going 3 years out now. So you and a business partner, you bought it and you have 8 units between the two of you. You can sell that as a package down the road. Properties are sold like that all the time. You probably have seen someone selling 30 or 40 single family homes to a group. Investors buy those, right? They buy cash flows. That's what we're looking for. We're all looking for something like that. It's harder to build that stuff up, right? It's just like a business. It's harder to start a business from nothing. Well, if you buy someone else's business who's kind of doing okay, you're in a much better position because you kind of hit the ground running. It's the same thing with property. You don't want to build a 15-unit from scratch. You want to buy someone else's 15-unit and kind of improve on it. Look for creative ways to finance your deals. They're out there. There's many, many deals. You don't have to put a whole lot of money down. But you got to get away from, well, what's the return on this property? What's the cap rate on this? How can we raise this? How can we... try to get into the deal. Try to structure creative financing. There's so many ways of doing it. Now, there used to be a way, and I don't know if this is still, where you could assume VA loans. I don't know if that's still the case. You probably want to do some research. If anybody knows the answer, definitely let me know. But loans aren't assumable anymore. They used to be. It used to be much, much easier to get into those financing deals. But if somebody has a loan on the property, and suppose it's a 10-unit property. Let's say you want to stay in this space and you want to do 10 units. You can, in some cases, just kind of take over their financing and get financing on top of that. So there are ways to structure those things. Now, you can do the reverse effect too. So if you have an 8-unit building, you can also chop it up and sell it off as 2 4-units to someone else trying to get 100% financing. So there's many ways you could actually do this. You don't have to look at it from one point of view. There are ways you can split something up. So many times I've seen 16 units split up into 4s. It's all about the financing. It's really all about the terms, right? You would buy someone's house for $1 million if you only had to pay them $100 a month. That wouldn't make, why not? So really structure those terms in your favor and team up with good bankers that are a little more creative. Let them know what you're doing and what you're coming up with, and they're going to give you some creative outputs. They're going to give you a lot of different ways to get into that deal. But I thought that was really exciting that, and I know people know this, and maybe you're not a veteran, maybe you're something else, but I'm sure there's other ways to structure those deals. There is, depending on the size of the deal and the cash flow of the deal, more programs open up to it, right? So there is a program probably, and I don't know what the name of it is, but let's just call it Investor Group A. There is a program for certain investors, but maybe you can't add owner financing on that program. So maybe it's at 75%, but it caps out at 85%. Well, that's not the right program if you want to get into something with very little money. Maybe you have to pay a higher interest rate, but you got to get hard money involved. You got to figure out a way to get private financing involved. There are ways to do that, but figure out a way where you can get into a deal with no money out of your pocket and start cash flowing. They're out there all the time. You just got to, open your minds a little bit and start seeing who's in your circle and who you could partner up with. I hope this video was helpful. Let me know if you have any questions on anything. Thank you.